On Business Incorporated today. Egypt inflation eases to 38.6% in April. Ghana's currency poised to be one of the strongest globally. And Eskom spends $1 billion on diesel turbines. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. As usual, let's get into the market. Well, not a very sharp day for the NGX, unlike yesterday when we had that market running on a bull speed. But today, there's been a pause on that. That's why we see it's a -1 for the NGX, even though we're still on 55, 0.03% down. I guess it's expected with so much profit gathered yesterday. Profit taking should actually be the next on the market's agenda. South Africa is also down 0.55% at 75%, 521.44. South Africa has lost that 78 index points that they've been running around with. That has reduced. Now let's look at other parts of Africa. We go to Egypt, and it's a green one for Egypt, almost 1%, 0.85 at 17,683.27. Kenya closed yesterday really good, 2.49%, regaining that 100 index point that they have been known for. We move on to the Middle East now and see what's going there. A lot of it were negative at intraday, with just one of it positive. Abu Dhabi, to start with, is in the red, 0.18%, 9,467.34. Dubai is positive, 0.29% at 3,577.68. We move to some other regions there and see just negative all through, all red. Saudi Arabia down more than 1% at 1.16, while Qatar is less than that, 0.66% at intraday. We go to Europe now. More than a fifth of Europe is at severe risk of experiencing a drought this summer after months of record low rainfall. The problem has been front and center at a meeting of the agricultural ministers of the EU on Tuesday, with many governments pledging to tap into European funds to tackle the problem and its consequences on agricultural production. Well, we have our correspondents there, DW correspondents working with Channels, Andrea Nepori, joining us from Berlin to give us more. Andrea, good afternoon. Well, can you give us an overview of the current situation and, of course, the conversations going on there?
Thanks for having me. Months and months of low rainfall have been hitting the agricultural sector very hard already in most southern European countries, especially in the Iberian Peninsula. Portugal officials say that 40% of the country's agriculture will be affected by the ongoing drought, and yields will inevitably suffer from that. In Spain, since the beginning of the year, rainfall levels were way lower than usual, and as we move into the summer, the country's water reserves are only half full. This comes after a prolonged drought that has forced many farmers there not to plant at all, given the scarce availability of irrigation water. In some regions, such as Andalusia, farmers have seen their water allocation cut down to up to 90% in some specific cases. In Italy, the situation is unusually reversed, with the northern agricultural areas of the Pianura Padana having the hardest time to cope with the ongoing drought. Southern regions where lower rainfall levels are expected rely on less water-intensive farming and haven't had major issues with their crops so far.
So what are the local governments there? What conversations are they having, and how to help and buffer some of this?
Ministries of southern EU countries, especially Portugal, Spain, France, and Italy, are asking Brussels to adopt special measures to alleviate the effects of the drought on farming. In practical terms, they want the European Union to activate a special crisis reserve fund of 450 million euros per year that's set aside exactly for situations like these. In fact, last year the EU already dispersed some of those funds to EU countries such as Spain to counter the grain trade crisis ignited by the Russian invasion of Ukraine. Other countries and the EU Commission have expressed some reluctance, and they don't want to activate the fund too quickly, mostly because the requesting countries are already heavily subsidizing their agriculture and in particular livestock farming. The political situation is evolving, but it's worth mentioning that for the EU to activate the crisis fund, all countries will have to agree, and so far that's still not a given.
What about the market? How's that looking? And perhaps there's some companies that deal in agricultural produce there.
The excitement for the U.S. debt ceiling deal started wearing off on global markets, with investors back into data watching mode. On that front, persistently high inflation in Asia is affecting the indexes, with Hong Kong losing 2.91% and Tokyo shaving off 1.66%. In Europe, indexes closed lower as well on Tuesday, with shares in London leading the region. The downtrend continued today, with both the DAX and the FTSE 100 opening lower. The U.S. markets were mostly flat, with investors watching out for the debt ceiling vote expected this week and new jobs data coming later this week. Most Wall Street indexes were slightly in the red during pre-market. One big winner, though, was NVIDIA.
All right, Andrea, thank you so much. Now let's move over to the United Kingdom now, where we have Teniola standing by at our London studio. And I learned today was not a very good day for residents in London. Members of the Train Drivers Union staged a walk out today, and this is expected to affect FA Cup over the weekend. But let's have Teniola tell us the details. Hi, Tenny. Good afternoon.
Hi, Annie. Good afternoon. It's not just the FA Cup final. It's a really busy weekend here in London. I'm sure you've heard our very own Burna Boy is performing on Saturday at the 80,000 capacity London Stadium. So a lot of people will be in town for that. Beyonce's tour concert is also on the same day. And apart from the usual tourists that we're used to, there are some other popular sporting events also taking place. So it's a really busy weekend, and definitely not one where you want to be worrying about transport cancellations or delays. So a lot of disruption is anticipated, and passengers have been warned to plan their journey before traveling to avoid being stranded. The talks with the government don't seem to be going anywhere. So I think, as the government is saying, actually, these strikes were planned to cause the most disruption possible and for the train drivers to press home their demands, Annie.
Yeah, obviously strategically planned, to make impact. In this case, not very positive impact. But, we'll continue and follow that story. But what's the market looking like at intraday?
Well, it's not a good day. The FTSE All shares down 0.19%. The FTSE 100 is also down 0.19%. And the domestic market, the FTSE 250, is also trading lower at 0.30%. In the currencies market, the British pound is currently trading down against the US dollar by 0.46%. The pound is also trading up against the euro by 0.13%, but trading down against the Japanese yen by 0.39% at intraday, Annie.
All right, thank you so much, Teniola. Enjoy the rest of the day. All right, let's move to other markets now. Asia, Hong Kong's Hang Seng Index tumbled nearly 2% to a new low for 2023 as Asia-Pacific markets mostly fell on Wednesday. The index briefly entered bear market territory and closed 1.94% lower at 18,234.27 as China's latest manufacturing purchasing managers index slid for a second straight month. Now let's take a closer look at the numbers, starting from the Nikkei 225. It's almost 1.5% in the negative at 1.41%. 30,000 there, 30,887.8. The Shanghai Composite also in red, 0.61%. You know, all of this follows that China's data that showed that the economy wasn't moving as fast as was expected or analyzed. Then we have the Hang Seng Index, almost 2% in the red, 1.94% at 18,234.87. The Kospi, wow, is down a whole lot down there. And in Australia, it's also negative 1.64% for the close of trade in Asia. Moving out to the United States now, where stock futures were lower on Wednesday as investors kept their eye on that federal debt ceiling debate in Washington ahead of the final trading day of May. Futures tied to the Dow Jones Industrial Average dipped 33 cents or about 0.1%. S&P 500 futures slid 0.15%. Nasdaq 100 was down 0.17%. The move in futures comes after a muted day of trading on Tuesday that saw the Dow shed about 50 points, while the Nasdaq rose 0.3%. Heading to the final trading day of May, the Nasdaq Composite is nearly 6.5% for the month. The S&P 500, however, is up only 0.9%, while the Dow has fallen 3.1%. Now, that outperformance of the tech-heavy Nasdaq is due largely to, the excitement around artificial intelligence. Now, NVIDIA, yesterday we saw them hit the market cap above $1 trillion on Thursday. It was an exciting day yesterday for artificial intelligence. We have Maria Bird now to give us more details from Tuesday's trading.
The U.S. stock market was a bit unstable on Tuesday as the Dow Jones was down by 0.15%, the S&P 500 was flat, and the heavy tech Nasdaq was slightly up at 0.32%. This was mostly due to the fact that artificial intelligence was showing some gains for the day. It is clear that many investors are not sure if the debt ceiling agreement will make it past the House, even though the President of the U.S. and the Speaker of the House came to a preliminary agreement. It is also clear that the House Rules Committee has passed it a 7-6 vote, as this will allow the bill to make it to the House floor for voting on Wednesday. This could mean major changes for the U.S. economy if this debt ceiling agreement is not reached by June the 1st.
All right, now let's move over to the oil market. Prices extended losses early on Wednesday as worries of slowing demand from top oil importer China after the release of weaker than expected economic data outweighed some positive progress on the U.S. debt ceiling bill. Brent crude futures for August delivery slipped 97 cents to $72.57 a barrel. U.S. West Texas Intermediate crude was down 80 cents to $68.66 a barrel. Wrapping up earlier gains reversed after China manufacturing data was released. Both benchmarks fell by more than 4% on Tuesday. Brent's July contract, which expires on Wednesday, that's today, and the U.S. benchmark were on track for monthly declines of more than 7% and 9% respectively. China's manufacturing activity contracted faster than expected in May on weakening demand, with the official Manufacturing Purchasing Managers Index, the PMI, down to 48.8 from 49.2 in April. The outcome lagged a forecast of 49.4 debt ceiling and ahead of a meeting on June the 4th by OPEC+. In the metals market, gold prices were set for a monthly drop on Wednesday as progress in the U.S. debt deal and expectations that the Federal Reserve will likely raise interest rates further bolstered the dollar and eroded bullion's safe haven status. Spot gold was down 0.1% at $1,957.89 per ounce and has lost 1.58% so far this month. U.S. gold futures also dipped 0.1% to $1,955.50. An overnight decline in Treasury yields has allowed gold prices to defend a support confluence zone at the $1,940 level for now. and also imminent bounces since early May may have short-lived, but raises the chances that it could be the same this time around as well. Meanwhile, the dollar index held firm, offsetting support from a decline in the benchmark U.S. 10-year Treasury yield. Let's take a break now. When we come back, we have some things happening in Ghana. The Cedi is looking good at this time. We'll talk about that and a whole lot more. Join us here on Business Incorporated. Welcome back to watching Business Incorporated here on Channels Television. We started from Ghana, where the currency is poised to be one of the strongest rallies globally after the West African nation's $3 billion pact with the International Monetary Fund gave investors hope that it can climb back from last year's debt crisis. The Cedi was the best performer worldwide against the dollar in the run-up to the IMF deal, which was sealed mid-last month, mid-May, beg your pardon. That was the latest in a series of violent swings since Ghana unilaterally suspended payment on most of its external debts in December. The currency is poised to end the month with a 5.3% advance and the fourth biggest of about 150 currencies tracked. Well, let's find out what this really means to Ghanaians now with Mr. Ernest Owusu-Nyako. He is a financial and management accounting expert based in Accra, Ghana. Good afternoon, Mr. Nyako. Thank you so much for your time.
Good afternoon, Channels. Thank you so much for having me.
Yeah, so the world is celebrating your currency now, but I guess the more important part will be, what's this translating to? Is it translating to better standard of living, reduction in the cost of living, or is it just celebration on paper?
So it's all of that. We actually celebrated as a country for landing this landmark bailout agreement, especially around the time where we did. And it's also accumulated in some gains. And as you rightly said, the Cedi has started to show some kind of positive impact from that. It's all good news for us because investor confidence has been increased. Our trading partners have realized that it wasn't just by means of we trying to woo them into anything, but we actually mean that we have a program which is sustainable, and it's made Ghanaians in general feel much more confident in the economy again. And as you rightly said, last year was one of the years that the economy actually really saw some kind of shocks. And even before the bailout was approved, and if you care to know, we've gotten the 600 billion of it, which has hit the central bank's account. We are having that influx of confidence into the system where Ghanaians in general feel that we are back on track to get our economy in shape.
So from here onwards, do you see the Cedi continuing to gain value and it's spreading, or is this just, that excitement on landing this bailout deal?
Well, so the bailout in itself would also put us on track. And on Sunday, when the president of Ghana, His Excellency Nana Akufo-Addo, addressed the nation, he made mention of the fact that it's not a good thing, or it's not an easy decision for a country to decide to go in for a bailout, because it makes you put in certain measures that you would ordinarily wouldn't have put in, and it makes you streamline a lot of things. So it's more like doing a total cleanup, house cleanup, before you can get that. And the bailout in itself has given us some conditionalities, which actually will be measured periodically. So it talks about making sure we protect the vulnerable in society and enforcing certain social interventions that Ghanaians naturally had, like the school feeding programs and the like, which was one of the fears for most Ghanaians going into the IMF program. But it turns out that the program in itself is actually making us pledge that we are going to sustain those programs. And it's also made it a point for the central bank to also put in measures to strengthen the financial sector of the country, among other things like encouraging public sector and private sector involvement in development. So it's kind of making all that we've always pledged ourselves as a country become more enforceable now, because at the end of June, an assessment is going to be made for us to be able to get the next tranche of 600 in November. So it's giving us the hope that even if, let's say, authorities were not so strong on the commitments we made to ourselves as Ghanaians, now there's a reason for us to do that. And that in itself is why, personally, I am happy we landed this bailout agreement.
Okay, the other part of the requirement was, I think you have 3 new bills, taxes, that were passed, and we saw a lot of protests because people will have to pay these taxes, and they're saying if liquidity is already squeezed, where do you expect us to pay more taxes? How are people adjusting to that? So
it is true we've had to look at 3 new taxes, and it also giving us another step to revise our 2023 budgets, which means that, as the saying goes, to whom much is expected, much is given. If we are expected to grow all these areas, and mind you, our cocoa sector, which used to be a very huge backbone for our economy, has suffered in the face of all these economic crises. And the program has made it a mandatory point to revamp the cocoa sector and made all public sector accountable. So in the president's speech on Sunday, we know that part of our issues as Ghanaians and this economic wars is because of how we had to handle COVID and the decisions we had to take in settling some of the COVID-related issues. And in the light of it, we are actually going back to audit all public spend in COVID and all trust funds that went into COVID to actually see whether we actually spent what we had to spend. So if the private sector is now being given leverage to be able to develop, and I've seen some financial institutions actually moving in to support SMEs, as you may call it, where the certain restrictions are being lessened. So as an SME or as an individual in the country, if I have all other burdens reduced, the government is only going to realize the benefits by way of taxes, and is not, in this case, going to just sit in a coffers or a consolidated pool, but in our case, it's going to be part of a measure to stabilize the economy, where we see lots of inflows. Because mind you, our inflation went a record high since I was born. And so to actually make sure that we can stabilize a lot of our economy in this period, the program supported our initiative to include some few taxes, which are 3 of the taxes, and a critical assessment is being made to see the impacts of those taxes to the very vulnerable in society, and as it were, the people who are actually capable of paying those taxes. As part of all those tax regimes we are trying to reform, we are trying to also widen the tax debt to make sure that every individual who is susceptible to paying tax, who has the means to pay tax, actually pays. And maybe you might not know, now paying tax has become much more flexible, such that I don't have to walk to an office as in the past to go and file and then see some middleman to do. So all those measures are being put in place so that actually as Ghanaians, we can have a feel of it. And I was very happy with the way the media and everybody around, even in the remotest part of the country, was concerned about this bailout. All right. Because back in the days, you wouldn't have heard of a bailout.
All right, thank you so much. I'm happy with you, for those benefits and gains that have come out of a bad situation, now turned good, at least to an extent. Thank you so much, Mr. Ernest Onwusu Nyako, a financial and management accounting person from Ghana.
Thank you.
All right, now let's go to Egypt, where the annual core inflation slightly decreased to 38.6% in April from 39.5% in March, according to the data from the Central Bank of Egypt. Still, April's annual headline inflation remains well above the rate seen in April 2022, which was 14.9%. To alleviate the pressures of inflation and in tandem with interest rate hikes, authorities announced that spending on subsidies and social safety programs would increase by 50% in the new budget of full year 2023-2024 that starts on July the 1st. A 150 billion Egyptian pound government package came into effect at the start of April that includes 10 billion Egyptian pounds in wage and pension hikes and a 25% increase in cash transfers under the Takaful and Karama Social Support Program. South Africa's indebted state-owned power utility Eskom is spending huge funds to run its diesel-powered units, more than double as its fleet of coal-fired plants experience frequent breakdowns. Eskom Holdings Limited paid 21.4 billion rand, that's about $1.1 billion, in the 12 months through March 2023, compared with 10 billion rand a year before that to operate the open-cycle gas turbines intended to run the facility. That's the program today. Thank you so much for being a part of Business Incorporated. Another one comes to you tomorrow. I'm John Mekwa. Enjoy the rest of your day.